Good afternoon and welcome to the second webinar in the Infrastructure Journal 2012 webinar series, where we were debating the potential for infrastructure in North Africa, asking where will the bankable deals lie. I'm Sarah Tame, Infrastructure News Editor at Infrastructure Journal. I'll be chairing the session this afternoon. Before I introduce you to my esteemed colleagues on the panel, a few housekeeping rules. If you are having trouble hearing, please notify us by using the chat box on the GoToMeeting panel. We like these sessions to be as interactive as possible, so please feel free to ask questions using the questions function on the panel throughout the session. Now, without further ado, I would like to introduce you to our panel of experts. With me today, I have Adil Marghub from the IFC, Stephen Murphy from Cairo-based private equity firm Citadel Capital, Frederick Ottavy from fund manager InfraMed, and Martin Bennett from insurance broker Marsh. Frederick is the CEO of InfraMed Management and sits on the investment committees of InfraMed and InfraMaroc. InfraMed is a long-term investment vehicle launched in May 2010 by 5 major institutional investors. The fund is dedicated to investment in infrastructure in the Mediterranean area. Stephen is Managing Director of Citadel Capital Institutional Fundraising. Citadel Capital is a private equity firm in the Middle East and Africa, focusing on building regional platforms in select industries through acquisitions, turnarounds, and greenfields executed via opportunity-specific funds. Adil is the Manager of Infrastructure and Energy in the Middle East and North Africa region for the International Finance Corporation. Adil has extensive experience in infrastructure investments and advisory transactions in emerging markets. Martin is Senior Vice President at Marsh Infrastructure Practice. He heads the infrastructure advisory services for transactions across Europe, the Middle East and Africa, and has led advisory teams in over 200 infrastructure sector transactions. He is also a member of the Marsh & McLennan Company's Global Infrastructure Practice Executive Committee. Welcome to you all.
Thank you.
So let's begin. North Africa has immense potential for foreign investors. The demands for infrastructure arising from demographic change, a need to rebuild following the Arab Spring, and expectations of longer-term increased prosperity are driving a need for improved economic and social infrastructure. Martin, can you give us a brief overview of what the region needs in terms of infrastructure?
Thank you, Sarah. And I guess just to sort of kick off the discussion, the needs for infrastructure across the North African region have been building for many years, and the Arab Spring has really exacerbated the need for additional investment. As you mentioned in your introduction, demographic change, economic expansion has created a requirement for rehabilitated and new infrastructure, along with the rebuilding following the events of 2011. Putting, I guess, infrastructure into its immediate needs. Power is an obvious need across the region, enhanced power capabilities, water and wastewater supplying to the mass population, followed by enhanced social infrastructure, whether it be hospitals, schools, or other social facilities, followed by economic infrastructure, creation or rehabilitation of roads, airports, and rail links to expand the transport network, particularly because the advantages of doing that and creating deeper links into the African continent will also unlock some of the greater infrastructure potential further into the further south into the continent and feature a great advantage for those northern African countries that we're focusing on today.
So we can certainly see that there is a need for infrastructure. Stephen, what is economically feasible though, and where are the biggest opportunities compared to projects that nations say they would like to have built?
Yeah, thank you, Sarah. Look, in terms of the economic aspects of things, I think it always boils down to dollars and cents. And so, while you'd love to rehabilitate, for example, in Egypt, the rail network, if you do that to carry heavy goods, your expenditure per mile of railroad is treble or quadruple what you'd have if you were just doing it for passenger services because of the the weight of the goods being transported. So the economical feasible alternative is to rehabilitate the lock system on the Nile River, which stretches across the country and where 94% of the people in the country and indeed the major urban centres are all centred on the Nile. So that's a $150 million upgrade, and that is largely complete. But unfortunately, there's always a tail to government policy, and they haven't quite got the operation of the locks right or funded properly. But once that's funded, that's a small investment in something that will lead to significant savings overall in transport costs, particularly for bulk goods across Egypt. And there's about 300 million tons on an annual basis that travel around the country. So that's an example of what's economically feasible for a country like Egypt. The wish list would be, let's upgrade the railroad, but the reality is we can upgrade the lock system and Nile navigation and get the same bang for a buck for a lot less.
I see. And Adil, I mean, from a IFC point of view, there's obviously, we've seen figures of how much of a need there is for infrastructure spend in North Africa. But in terms of when it comes to the projects and the sectors that we should be focusing on, I mean, what's your view on that?
I think power should be fundamental to any infrastructure spend in the region, and some of the numbers that the World Bank has looked at, it talks about North Africa spending 5 to 6% of its equivalent of 5 to 6% of GDP in infrastructure, and almost half of that should go into the power sector. In terms of a lot that we're looking at in the region as well, we are seeing power to be fundamentally the largest piece of our business, followed closely by transport.
Okay.
And if you look at the needs of the sector today, I mean, you're looking at a power crunch in Jordan. Likely, you're looking at a power crunch in Egypt. Morocco has almost next to nothing in terms of reserve capacity. So the power, to me, is the more immediate one that needs focus, and it's being focused on by a host of projects.
So historically, the majority of project finance deals in North Africa have been in the oil and gas sector, like the recent Nostrad refinery deal, which we'll look at in more detail later. How can these projects promote infrastructure investment in the region? Martin, would you like to comment on that?
Yes, of course. Oil and gas projects basically do form the backbone of most North African economies, and if they're managed correctly and the reserves are managed correctly, so they can create significant sovereign revenues, which can then be reapplied to other essential infrastructure needs and development within particular countries. I think if we look back in time, some countries have been better than others at actually managing the revenues and the wealth that's been generated from the oil and gas sector. And hopefully, post-Arab Spring, as the new political climate matures across the region, there will be a more consistent approach country by country. Effectively, these large projects, though, do create opportunity because there's an ongoing need for, I suppose, construction support and infrastructure support facilities in country. The cost of transporting raw materials into the region can be quite excessive, and therefore having these large projects, creating the pardon the pun, infrastructure to actually deliver them in country can actually be a catalyst to developing further infrastructure projects as countries do need to rehabilitate and expand their other essential infrastructure.
Okay. And Frederick, I mean, with your experience as a specific infrastructure investor in the region, how do you feel that oil and gas projects fit into the fabric of what is needed for infrastructure in North Africa?
They will definitely play an important role, but that will of course depend on a country-by-country basis. They are also generating revenues for the governments, which will permit the project in other areas to be implemented. So it is overall positive with the oil and gas in some countries driving the move of the general infrastructure business.
Great, thank you. And renewable energy has also been a big talking point in North Africa, especially with talk of the Desert Tech program in Morocco. What is the outlook for renewable energy in the region, Adil? And particularly a question from one of the listeners, what is the viability of solar power in the region?
Okay, I mean, first looking at sort of the past in this region, it's lagged behind other parts of the world in terms of investment in renewable energy. Among one of the reasons for that has been that it's also the region with some of the lowest end user energy prices because of the subsidies, and subsidies not just in the oil producing countries, but even some of the countries that are importing energy. So it becomes very difficult to have a sustainable renewable energy program if end user prices are subsidized and you don't have a framework to have a feed-in tariff or some kind of mechanism to get proper sustainable renewable energy project done. At the same time, the region has probably one of the best solar resources in the world, and pockets of this region have one of the best wind resources in the world. In terms of looking forward, I feel cautiously optimistic because I think given all the fiscal pressures some of the countries are facing, you'll start to see subsidies going away from energy, and maybe some kind of mechanism being constructed to do more renewable energy. Some of the highlights today you see on Morocco, where there is wind, there's the solar project in Jordan as well. So I think the outlook, I would say, is cautiously optimistic. In terms of looking at solar, globally, when you look at solar, PV prices have declined, so photovoltaics are coming down. If you look at the solar thermal, Morocco just completed a bidding for a solar thermal project. It came in under 20 US cents a kilowatt hour, makes it the lowest cost solar thermal project in the world. So prices are declining, EPC. So it's a question of, what do you compare that price to? So, a 20 cents a kilowatt hour solar project, when you compare it today to Jordan, where Jordan is relying on expensive thermal generation, it's actually very competitive. So I think it is viable. It is viable in countries which are relying mainly a lot on thermal generation, which is expensive. So I'm optimistic. I think that it is moving in that direction. We hope there'll be a pipeline coming out of North Africa in wind and in solar.
Yeah, Adil, if I could add to that, I think it's a very interesting area. We've looked at and we are in fact collecting for biomass plants, and basically it's an early stage in the renewable front, but there's 27 million tons of biomass generated in the Nile Delta on an annual basis, and we're starting to collect that, and cement plants essentially are burning that as an alternative fuel to make cement. Now, I know cement is not a favorite in the environmental sphere, but that's a good step. And as Adil rightly points out, as the subsidies come off energy here in the region, renewables, I think, will really get a big boost. We've looked at solar thermal, and with sort of sourcing locally, we think we can probably get to something around 15 cents a kilowatt hour if we're not doing the curve mirrors and with some CFP technology that we've looked at. So it is going to rapidly become more competitive. Just to give you a sense of what the domestic price is, it's around 5 or 6 cents a kilowatt hour currently here, which is what's being charged. But the subsidies, when the subsidies come off, that should increase significantly.
So that's very interesting. And I mean, Martin, Frederick, do you have anything to add to that renewable energy conversation?
I think certainly from our perspective, we do a significant amount of advisory work around renewable energy projects, and looking at the likes of Morocco and Algeria, particularly around CSP, and also obviously around the Moroccan coast wind projects. The pace of that is picking up. I think the opportunities over the medium term are great, and certainly going back to the point about local sourcing, the more that can be expanded, the better, I think, for generating or making these projects more viable and generating the level of return required by them.
That's great. Thank you very much.
From InfraMed, I can only concur the proportion of renewable energy is growing at a regular pace in the various pipelines, and of course there will always be a huge need for conventional energy, but definitely there is a very good set of prospects for renewable energy.
And following on from that, let's talk a bit about the revolution in North Africa. And many countries in North Africa have seen a change of government with a move towards democracy. But what does that change at the top mean for infrastructure and project finance? Frederick, I mean, for you in the business at InfraMed and the deals that you've been involved in, what has the change meant for you?
Well, I think for international investors, the region has been posing succession issues before the Arab Spring, and they were concerned about rulers being in power for about several decades, and the Arab Spring brings the benefits of sort of clearing the situation in many countries at the same time. So if I may use EPC vocabulary, we switch from a latent long-term uncertainty to patent short-term uncertainty. So for the moment, in some countries like Tunisia and Libya, obviously the prospect for investments have slowed down. But overall, it's creating a better base for the medium term, and by definition, people like infrastructure investors are looking at the medium term.
Okay, and I mean, Martin, are there differing views from external investors compared to local investment funds?
Yeah, and I think I would start by echoing the comment that there needs to be a look both from a short and medium and a long term at the region when considering investment. Certainly what we see at the moment is that the majority of transactions, whether they be greenfield or brownfield M&A transactions, are being executed by local investment funds and banks, those looking in from the outside who were perhaps having an initial focus on North Africa before the Arab Spring, are still very tentative towards their investment, and certainly from what we see, international banks, if there isn't support from effectively the multilateral development banks, are still very tentative around providing debt finance to these sorts of projects or transactions. I think short term that position will continue, and effectively what external investors need to see in place is a set of circumstances where they have a more medium to long term confidence in regional and state government, which to some extent will only happen through time, distance and effectively maturity of the current situations in a number of countries where there have obviously been very recent elections, and obviously in some countries still interim governments pending further elections in the future. External investors also need to see stability and commitment from those governments, and that will only happen in time as those governments actually effectively get settled in their own policy making. Making sure that there is a sound legal and regulatory framework, particularly around infrastructure investments, to again give confidence over the more medium to long term stability of yield and return from those assets, and also effectively as time progresses and provided the region continues to move in the positive ways that it has over recent months, that effectively the perception of political risk country by country reduces, therefore increasing the availability of debt finance from international banks again. So at the moment, I think the majority of opportunities are being taken by the local investors who perhaps are able to take a more local, measured view of in-country situations than those looking in from the outside who don't necessarily have the experience of particular sectors and political situations to be able to manage those risks at the moment.
Great, and Stephen, you're based in the region. Do you see external investors and international banks showing an interest there since the revolution?
You know, we've just closed a very large investment. You've mentioned it earlier in ERC, Egyptian Refining Company, Mosterud, and I think transactions like that help kind of lead the way or create a path for other people, other international investors to look at the region. There's a particular flavor to that with some import-export banks providing guarantees and the European Investment Bank providing guarantees, etc. But that gives a path to larger projects being undertaken. I think on the on the overall political side, we have new governments in many instances. Actually, in Algeria, a liberal government, and who would have thought? And so those governments are kind of learning on the job at the moment in Tunisia and Egypt and Algeria, and I think they're all very cognizant of the advice of many participants, including the IFC among others, that they need to honor commitments, and I think once you see the IFC's deal with Egypt in particular go in place, I think that will be a signal for more long-term projects to be undertaken.
And let's focus specifically on the Mosterod project that you closed recently. I mean, Frederick and Adil, you also worked on that deal. Perhaps you can talk us through that project. What challenges did you face, and some more about what the significance of the deal means for Egypt and the wider North Africa region. Frederick, maybe you can start us off with that.
Sure. Actually, InfraMed joined the transaction at a relatively late stage, so it is very much Citadel Capital and IFC who have been through the most difficult situation. The transaction has been in the market for a while. I think the role of InfraMed, the positive move we made, was at a point where there were questions about this transaction being long in the market, was to come from an international investor standpoint and decide to make a significant 100 million euro commitment. And I think that contributed to manage the transaction afloat until such time the even more significant support was obtained from Qatar, and I think it was the key trigger.
Yeah, maybe Adil, you can comment from an IFC perspective, but from a Citadel Capital perspective, this has been a transaction that we've been involved in for nearly 5 years, from kind of start to finish. It died actually twice. It died in the global financial crisis in 2008, where we really lost commercial bank interest and we had to restart on the banking syndicate. And then it died again in the revolution, where we lost the local political will that had been backing the transaction, and so it really is like the phoenix that was raised from the ashes, where we started again nearly 18 months ago from scratch almost, with with a contractor who stayed in place, Mitsui GSK, on a lump sum turnkey contract, and with a management team, a core management team that we'd had in place for 4 years, and obviously our team at Citadel Capital. And then really we gathered to it again specific participants, the development finance institutions and the IFC, stayed with the project, and we nursed it back to life over an 18-month period. The big turning point came late last year in the financing on the equity side, where the Qatar Petroleum International came in for a 400 million commitment, which really solidified our equity funding for that. But in terms of benefits so the story is a long one on the financing side, but the benefits to Egypt in particular are that, this is a second stage hydrocracking coking facility that will produce over 4 million tons of product a year. In particular, it's engineered to produce nearly 2.5 million tons of diesel products or light fuels, which is exactly what Egypt needs most, and that's produced right at the point of demand for that product, which is Cairo, which is 40% of the market here in Egypt. So there's lots of benefits flowing to the Egyptian state, estimated at $250 million plus in annual savings for the import of light products. And in particular, there's lots of environmental benefits because we're significantly increasing the environmental qualities of the diesel we're producing. It's Euro 5 diesel, which is 10 parts per million of particulate matter. So the environment improves here in Egypt. As I look out my window, 4 years' time, I'll probably see and certainly smell a lot less diesel fumes in the air because of the building of Master Road, and it's a business that in total will generate over $3 billion of revenues on an annual basis and generate EBITDA of about 700 million. So it's a huge project for Egypt, and it's important for the government, and it's really a landmark project for the environment and for EGPC in particular. So.
And just to add a couple of things. First of all, I think kudos to Stephen and Citadel Capital for having the persistence to go through this project. It's been a long story, and it's wonderful to have it happen. And it's a great signal to the market that large, complex deals post Arab Spring can still happen. Fundamentally, as Stephen said, there are many benefits to this project. It makes a lot of sense. But it's been a volatile ride. We got involved at the end of 2009. I think we were about 2 or 3 weeks away from financial close when the Arab Spring happened. Brought its own challenges. Post Arab Spring, you see shortages of refined products in the market in Egypt, which basically really gave people a sense of why this project is important. Just want to add 2 things on this. I mean, 2 sort of lessons or two observations on this. You see an entity like Qatar Petroleum coming in, writing a equity in this project, and I think that is important to recognize, and that's well in line with the trend that we've seen in the region, which is investors from the richer part of this region, which is the GCC, from Qatar, Saudi, from the UAE, that are investing in North Africa. And 10 years ago, 15 years ago, you wouldn't see this kind of investment happening, or you wouldn't see the existence of such strategic industry players. Other examples that come to mind are Taka from Abu Dhabi in Morocco, and they're expanding the plant there. You have Aqua Power from Saudi that is investing in Jordan, investing. So that's a new trend, a new investor that we've seen in this region, and I think in the new North Africa, post Arab Spring, we'll see more of these GCC strategic investors putting money in. The other thing that strikes, which is also in line with the trend in the region, is if you look at the financing, it is sort of the foundation of this financing is export credit agencies, the JBICs of the world, EIBs, development banks, and that's something post 2008, post Lehman, we've seen happen even in the richer part of the region. So even deals in Saudi, in the UAE, have relied on the JBICs of the world, and that's again a trend that we see going forward in North Africa. You will see a lot of these types of financial institutions, the EIBs, IFCs, the African Development Bank, JBICS, Koreax. And so that's another sort of big signal for me in this transaction.
And on that point, I'd like to, if we can, just skip forward in our discussion to talk about, you know, where the majority of financing is likely to come from future projects. I mean, who will be where will the lending come from? Will it be entities like the IFC, like yourself, or are we going to see international banks coming in? I mean, Adil, do you want to continue on that point for a second?
Yeah, I mean, just to take you back to the sort of the post-Lehman world in this region, where large project finance transactions in Saudi, in the UAE, went into deep freeze. You know, this is the fall of 2008, and what we saw at that time was an emergence or more funding coming from the export credit agencies to fill in that gap. And previously, you would see large offshore commercial banks doing large tickets, and that sort of went away. What emerged from that is a large portion of financings, and I think if you look at a 2-year, 2009 to 2011 track record of large transactions, you'll probably see something like 40% of finance coming from the international financing institutions like JBIC, Koreax, and in the non-GCC part of the world, the Islamic Development Bank, Proparco, DG, IFC. And that's, I think we're living in sort of a post-Lehman world, and that's sort of now continuing to North Africa. In terms of local banks, which are, again, active in pockets, when the first sort of PPP was done in Egypt pre-crisis, which is the wastewater deal, it was funded 15-year money, local currency, by local Egyptian banks. So 15-year money was excellent. I think don't know if we'll see a repeat of it, but we are seeing activity in certain countries like Morocco where local banks are going out. And the question is, you know, how much of this asset liability mismatch can they take on their balance sheet? So I think going forward, I see a strong role for international institutions coming in. And that also brings me to another point: is when you are structuring a transaction and you think about who your equity partners are and who your EPC contractor is. The other element to it is, can that contractor or that equity investor help you bring financing? And we saw that at least in the GCC, where investors reached out to Japanese or Korean entities, because along with that came large checks from ECAs.
But in terms of international bank financing, I mean, do you still think that projects will need multilateral guarantees in order for international banks to be involved?
I think given the political scenario now in North Africa, commercial banks going uncovered would be difficult. So I would still see offshore commercial banks wanting to come in with some kind of cover, either through an ECA cover or some kind of insurance cover.
Mm-hmm. And Martin, if you'd like to pick up on that point.
Yeah, I mean, certainly when looking at North Africa from a political risks insurance perspective, certainly, obviously, there are two options. One, effectively using the guarantee agencies, and secondly, using the commercial markets. At the moment, I think it's probably fair to say that the commercial market political risks insurers are perhaps muted in their appetite for North Africa because of the I suppose the recent past of instability, and as insurers tend to be quite conservative types, are effectively looking for a period of greater stability before they start to actually commit capital to the risks involved. Having said that, there are a number of ways of obviously structuring insurance to manage political risk, and I think it's that there is still opportunity for project sponsors to work with insurers and to perhaps try to introduce slightly more innovative approaches to covering both debt and equity tranches of project finance. to effectively rehabilitate the commercial markets into the North African region. However, short term, I think that will still be a struggle. It's probably going to be more of a medium term, next perhaps 2 to 5 years outlook, where markets will return and start to offer reasonable policy tenors rather than only short-term tenors, which won't necessarily match with debt finance facilities that are in place, and start to create I suppose, a stronger level of guaranteed support.
I think there's another point, sorry to glom onto this, but I think there's another point in that there needs to be capacity building among the local banks as well. What we found on funding our investments is typically the international banks have been the syndicate managers, and since the international banks have gone out of that market effectively, the local banks haven't really stepped up to create the intellectual capacity to syndicate, and that's very apparent in places like Algeria, and probably less of a problem here in Egypt. But I think that capacity building also has to happen and will really help regenerate the overall funding picture for infrastructure.
If I may add on this, we expect that there will be more multilateral lending than guarantees for at least 2 reasons. One is because the commercial banks have difficulties to fund money, not only because of the region, but on a global basis, given their new constraints. So we expect to see more and more lending rather than guaranteed on the multilateral. And also some potential providers of loans, which are the bilateral development institutions. The way OTA, overseas development aid, is calculated, for them, lending does count in terms of OTA statistics and not guarantees. So that's the reason why we think it will be difficult in the short to medium term to structure lending with development financial institution guarantee and commercial banks lending.
Okay, and let's touch just a little bit on the regulatory environment. I mean, what do external investors want to see from these governments in these countries in terms of regulation in order to create an environment where it facilitates investment and financing? I mean, Martin, do you want to start us off with that?
Yeah, no, happy to do so. I think in terms of regulatory framework, the requirements of external investors will mirror North Africa as for perhaps other regions around the globe. Effectively, they're looking for a clear regime which has a medium to long-term approach to it. Stability within that regulatory framework, and confidence that once the regulatory framework has been put into place, that it won't be retrospectively amended to the detriment of investment decisions that may have been made on the back of the system being put in place. So effectively, initially it's having confidence in the government forming the regulatory regime. Secondly, effectively creating a clear regime with stability, whatever the sector may be, and through that, effectively just giving confidence to investors that a business case for investment will be capable of being delivered without any material untoward external influence through a change in regulatory regime post-investment.
Okay, great. I mean, Stephen, Frederick, in terms of your investments in the region, are there areas where you lack confidence in the regulatory regimes in these countries?
Look, I think we have experience in Kenya and Uganda with the railroad there, and we have experience obviously here in Egypt and in Algeria, again dealing with governments as partners in many of the industries we're investing. Algeria, it's cement, and it's a national cement company, and in Egypt it's the national oil company. The thing we found that's the most frustrating aspect of our investments is the particularly in Egypt post-revolution is the kind of slowdown in government decision making, and decision making by any official it's just very difficult to get decisions out of people, and that's multifaceted, but essentially due to an overactive Attorney General and fear among government officials that if they make a decision, that could be reversed and they could find themselves, facing an inquiry of some sort. So it's been difficult. The frustration for us has been the slow pace of decision making, and I think that governments, in Kenya and Uganda, we've actually had a good experience, and they've been. We had to renegotiate a concession agreement, which we did over a period of 9 months, and I think everyone was happy with that renegotiation. So we've had different experience with governments, and they're not exactly all positive experiences, but you get through them in the end. And you find, I think, that there's a consistency, and certainly in Egypt there's a framework because of the oil and gas industry, interestingly here, for large projects. So you have arbitration and things that work if things do go wrong. So overall, the frustration is the time frame it's taking at the moment, in particular in places like Egypt, to get any decision out of government.
Well, I agree. The fact there is a good regulatory regime on paper is important. The fact that the government makes decisions based on that framework is also very important. I would say there are two areas, legal areas, where some clarity is very useful. The first one is obvious. It's the PPP law, public-private partnership law, makes things a bit simpler. So in Morocco, for instance, there are a lot of opportunities, but the pace of implementation of these projects is probably slower, given the fact that there is no unified concession regime like PPP law we have in Egypt, where the process of concessions here is probably easier to implement. I would like to insist on the importance of the tax regime and the tax regulation as well, given that in many circumstances the government do not want to take direct measures towards the project. They want to appear as a state of law. So it's very often through the tax, and especially the corporate tax, that the dispute can arise. And I may probably quote the Jay-Z case, which is a mobile phone license held by Orascom, based in Egypt, and the government of Algeria. The dispute took place around the tax issue. So that's also an area which is important and where investors should look at carefully.
Great, and I wonder if I could just jump back now to, we've talked a lot about the energy sector and opportunities there, but there's obviously a need for social infrastructure in the region as well. Adil, what is the scope for PPP projects in North Africa?
Well, I think if I look at it today, I would say it's too early to tell, or too soon to predict. I think before the Arab Spring, when I looked at the region, especially Egypt, which had a PPP law, functioning PPP unit, and had a pipeline of transactions, and it was looking like slowly and eventually those transactions would come. The first one being the wastewater deal. Having said that, I really have to recognize that the Egyptian PPP unit did close on one transaction a few months ago, which was the hospitals transaction. But again, I mean, we're in a new sort of political dynamic here, and it's a little early to tell how new governments will look at this in Egypt and the rest of the region. So I think over the long term, you can see the need, you can see the constraints on budgets, and sort of the logical answer is they have to move to the private sector, and to do that they have to have the right frameworks in place. I'm just not sure how soon we will get to that point.
And do you think that the PPP model is the right model for the region?
You know, we've seen the PPP model in many places in the world, in Latin America, and now in Eastern Europe, and it brings efficiency. And if you look at doing something on the government's budget versus to the PPP, well structured, it will bring efficiency. So to me, you know, having less fiscal space, yes, that's one reason to do PPP. Another reason is just efficiency of what will happen and how the private sector will run it. So it is the right way to go. But for it to happen, I think there has to be a you know, sort of a government behind it that pushes it.
Okay. Let's talk about. We've discussed, you know, the need for infrastructure in the region, but what about where the opportunities are in terms of the bankable deals? Where can investors actually get involved? I mean, Martin, can you begin by talking us through some of the sectors and regions where the bankable deals may arise?
Sure, thank you, Sarah. Certainly, if we look across North Africa, focusing on Egypt, Morocco, Tunisia, Libya to some extent, in Algeria, and look at where the opportunities are. First, it's probably absolutely right to say that post-Arab Spring, a significant number of deals which were at early stage or pipeline have been put on hold, and a lot of those deals are still on hold. Obviously, Stephen's referenced the refinery deal that's effectively gone through a double stall and reached financial close recently, and that's a great example of a project still being worked through. But when I look at schedules of project opportunity across the region, there's more that's sitting on hold than is potentially active at the moment. However, hopefully over the medium term, those projects will reignite and actively take forward. If we look at perhaps Egypt to start with, need for traditional power generation and water supply are key, and from what I see from the parties we work with, there are a number of pipeline projects coming through, in addition to a number of transportation and road-related projects. Other sectors seem to have stalled for the moment. We talked about desert tech earlier on in the call, and certainly if we look at Morocco, where there's a continuing great desire to invest in both solar and wind renewable power, where the government has an objective of creating 2,000 megawatts generating capacity each of actually wind, hydroelectricity and solar by 2020. That still remains an objective. So that's a huge opportunity for external as well as in-region investors to get involved at project level. Tunisia has power and water needs at the moment, as well as transportation and to some extent oil and gas opportunities. Libya obviously has gone through a very recent government transition, and from what I see, the vast majority of project opportunities in Libya at the moment are oil and gas related, whether that be refining terminals or supply infrastructure, both in terms of rehabilitation of existing facilities, as well as expansion and creation of new capacity to meet demand from the country's reserves. Algeria has oil and gas needs, including significant LNG development needs, so having had a long history of LNG production and transportation. Interestingly, Algeria still focuses on the opportunity of creation of a trans-Saharan pipeline, effectively bringing gas from Nigeria through to Algeria up to the coast for export. Again, a significant project as that progresses through over time. So there's a broad range of perhaps more immediate opportunity, quite focused to some sectors, and effectively I guess a need for both local and external investors to get involved in those as far as possible, but with the security of the multilateral development banks sitting behind them to help facilitate the debt required to make these projects work.
Great, thanks very much for that, Martin. One of our listeners is also keen to know about the M&A opportunities in the region. I mean, Stephen, perhaps that's something that you can comment on, and where you see the opportunities are.
Yeah, I think that, well, an overall comment on M&A is that not a lot of the M&A, probably about 40% of the M&A deals that happen actually get reported. So the statistics on M&A in the region, I think, are flawed. But the overall comment would be that deal activity has fallen quite significantly. There are a number of companies that probably will come up for sale in the next 12 to 18 months. We're looking in particular at some public to privates, because the overall level in many stock markets has declined in North Africa, and particularly in Egypt. So there's some great value on the stock market. So I think you will see some public to private transactions happening over the next 12 to 18 months as the political landscape becomes clearer. The difficulty with M&A in this region is getting acquisition financing. So the equity component has to be very, very significant, and that's really a major impediment to deal activity. If the local banks come online with a lot of acquisition financing, then you'll see deal activity picking up. But if you're writing an equity check for 100% of the consideration, then obviously I think it'll stay subdued.
Great, thanks for that, Stephen. We're drawing to the end of the session now, so I wonder if we could just take some questions from the panel, from the audience. Sorry. One we've had referring to what we were talking about with renewable energy at the beginning, and the subsidies and the tariffs. I mean, will there be guaranteed tariffs for renewable energy? Someone has asked. I mean, Frederick, can you take?
Yeah, depending on each country, there might be some guarantees. But we are then back to the question of the regulatory framework issue we discussed. And the second point is the long-term viability of such guarantees. So we are also back to counterparty risks. So I think investors should form a balanced view on how long the subsidy and at which level it will stay, and possibly make decisions where the lower case, the lower scenario integrates less subsidy than initially expected.
I'd just like to just add one point there. I mean, unlike what you see in Europe, this region is not going towards a feed-in tariff type mechanism. Mostly, if you look at Morocco and other places, they are using the sort of contracting model. So you go out, you bid on a PPA, and your lowest bidder wins. So in a way, if they don't respect that price on that tariff, they're basically not respecting their contract. And there are then penalties on the government for not respecting those contracts. So again, in a way, they are guaranteeing it, but they're guaranteeing it through a price in a PPA, which is competitively set.
Great. And another question we've had is, we've obviously talked about the Arab Spring and how it's changed the investment profile in North Africa, with local financing now more dominant. But there are also new countries investing in the region. I mean, what countries are investing now in North Africa? For example, we've had Japanese banks and Japanese export credit agencies involved in the oil and gas sector.
Yeah, I look on certainly in commenting on Egypt, the Qataris have made very significant investment commitments, equity investment commitments to the country. I think if the oil prices continue to be relatively high, you could see more money coming in from Saudi Arabia. I think that the natural homes for that regionally are places like the Lebanon, Egypt, and Egypt in particular. So you get the richer GCC pouring money into the poorer countries, and that's the flow that was interrupted by the global financial crisis, but could start to come online again as you get sort of more stable energy prices globally.
Great. And
the only other thing I'd add is you're also seeing the Japanese were always there, but in the last 5-8 years, you're also seeing the Koreans come. So they've come to the GCC, and now people like Capco are moving beyond the GCC. So the Japanese, Koreans, and at some point you'll see the Chinese as well.
great. Okay. So we're drawing to a close on the session now. So I wonder if I can ask each of the panelists to just give me their closing remarks. I mean, Adil, do you want to start off?
Sure. I mean, I believe infrastructure is a growth business in this region and in North Africa in particular. You have the demographics, you have urbanization happening. So I'm positive in the medium to long term. I think a lot of things have to happen really to get more momentum behind these transactions. So it is a growth business, and we in ISC, we believe in infrastructure, private infrastructure in this region.
Frederick, would you like to give your remarks?
Yeah, I think that the basis for infrastructure needs were there before the Arab Spring. They are still here. Again, the Arab Spring may be creating in some countries a blur situation for the next 18 or 24 months. But at the end, it creates, even for the countries which have not been protected, creates a political pressure on the government to implement infrastructure as soon as possible to satisfy the basic needs of the population. So overall, it is positive, and the trend should actually accelerate shortly.
And Stephen?
Yeah, I think we're a private equity house, and the reason we're investing in infrastructure is because really we can make PE returns in infrastructure investments, particularly the more economically compelling infrastructure investments in the region and in the poorer countries of the region. So we do kind of infrastructure and focus on infrastructure with a twist. And you know, there's probably 4 or 5 projects we're looking at now that fit into that category of PE-like returns from long-term infrastructure investing. And so the region is very interesting, and there are some very economically compelling investments that can be made. And that's along with all the work that's being done by the multilateral agencies and the bilateral agencies and everything else, and people like the EBRD coming in. You know, we'd see a pretty bright future going forward. It's never going to be easy. There's going to be lots of bumps on the road, but I think the democratic trend will only lead to more infrastructure investment because it's the most tangible manifestation of good government.
Great. And Martin, if you'd like to conclude for us.
Thank you. I guess I would certainly echo the comments of all other panelists in the fact that a more medium to long-term view needs to be taken around North Africa, but there is a huge growth opportunity arising from investment in infrastructure across the region. I think short-term we will certainly see some opportunistic deals being undertaken by strategic investors as well as private equity or quasi-infrastructure funds. More medium to long-term, as we hopefully see greater levels of political and therefore regulatory stability, we will see effectively a re-emergence of external investment, both from an equity and debt perspective, into the region, which will continue to drive growth in infrastructure, both as greenfield and brownfield developments. I think short-term, anybody sitting outside of the region will be focusing intently on their analysis of political risk and the impact of that, and only when there is effectively greater confidence gained through time and distance of new governments being in place will we start to see effectively the floodgates of investment start to open for the region.
That's great. Thanks very much, Martin. That was a very interesting discussion, and there's a lot to think about for those who are interested in doing business in the region. We had a lot of questions from the listeners. For those questions that didn't get answered, someone from Infrastructure Journal will be in touch with you to get those questions answered for you. And I'd just like to take this opportunity to say thank you to all the panelists who have made this a thoroughly engaging debate. So Adil, thank you. Stephen, thank you. Frederick, thank you. And Martin, thank you very much.